This update is pretty much the same as the updates for the last couple of months. We're starting to see the Calgary market start to slow down. It's not actually going into, it's not crashing the way some people will say the Vancouver and the Toronto market are, but we are slowing down a bit. And if you look at some of these numbers, let me just move this here. So total sales, like I said, are down almost 15% for September of this year. And, you know, if you look at the September before, it actually slowed in 2021. You know, it only slowed down by, well, it was flat, basically, minus 0.51. So we're starting to see the volume slow down, and that's to be expected when we start to see interest rate hike like we've seen in the last couple of months. And we're probably going to see another interest rate hike at the end of October or mid-October. Danielle, our mortgage broker, will talk about that when she gets on. But you're also seeing new listings fall. The second row down, our new listings are down 14%. So we're starting to see our sales fall and our new listings fall. So what that means is supply is falling as well as the sales. So it's actually not helping the price go down a lot. You can see down on the second last row there, sales are still up 6% year over year from September 21 to September 22. And what we like to see as investors is that the prices aren't falling. So anybody who bought this year and last year, they've seen a gain. We're not seeing prices start to fall 20, 30% like some of the luxury markets in Toronto and Vancouver. And oh, one thing I forgot to mention is the reason that Azad's not sitting beside me here, where he usually does, is he's in Sydney right now. He went to visit his mom. So Azad, tell us a little bit about the Sydney market.
Yeah, so the Sydney market, and it's funny, Tim, like I own real estate here, as everybody knows, and I'm looking at it. It is dropping like Vancouver and Toronto. Same thing, interest rates are going up. People are hesitant. There's oversupply here in Sydney. And one thing about all the investors out there, supply is the biggest factor that determines price. Okay, and that's why Tim and I are always wary when people are buying in the outskirts of Calgary and newer communities, because we know how much supply is coming on and how that could really stall the increase in appreciation. So you have to understand that. And Sydney right now has an oversupply in the condo market. We've gone through this in Calgary for 10 years. And finally in Calgary, we can tell you that the townhouses and the condo market have both roughly gone up 10% this year. And we're going to see that continue because these supply levels are so low. And that's why we're very, very excited for our clients. Yes, you have the interest rate factor that you have to make sure the numbers work. But Calgary, it doesn't have a choice. It's going to continue to grow. Nothing crazy, but we're in for good times. And my property here in Australia, I've come down here to check it out also. And it's not a time to sell. When the market is doing what it's doing, you just ride the wave. Sydney will go down a little bit, and then guess what? It's going to continue to go up because so many people are moving here from other countries that there won't be enough housing. And these cycles, Tim, you know, these property cycles just repeat itself. And you really have to belong to an investment group to understand this, and then not have that fear that interest rates are going up or property prices are stalling or even going down. In my case, in Sydney, it doesn't matter if you're in for the long term.
Yeah, and when we're talking about supply, all we have to do is look at the third row down, active listings. You can see from August 2020 to August 22, the listings go from 6,500 to 6,000 to 4,700. In September, they go from 6,600 to 6,000 to 4,700. You're seeing a drop in supply, and that's partially due to, yes, less resale houses on the market, but also our building is not keeping up with the population coming into the city. And whether that's it's a political move, or whether it's regulations, or the prices are too high, or the supply chain issues, it doesn't matter. Supply is being tightened, so you're not going to see our prices fall. The increases will not be as steep as they were at the beginning of the year or at last year, but we're still going to see an overall increase from 2021 to 2022. We'll see it at the end of the year, at the end of December. And that bodes very, very well, whether you own just a house to live in or whether you own a lot of rental properties. You're seeing those values stay, they're not falling. And so that means your wealth, your equity share in those properties is also not falling. So it's positive news,
Yeah.
even though there's negative news out there in the economy.
And one thing about Calgary, the difference between Calgary and Sydney, Australia, is that there's not enough rental properties. So guess what? In Calgary, rental rates are actually going up. They've gone up $200-300 already. But in Sydney, there's too many rental properties, so they're actually dropping. So at least in Calgary, we have that on our side.
Yeah. So now we'll move on to Danielle DeMarco's market update on the mortgage side. For those of you that don't know, Danielle is our go-to mortgage specialist. She doesn't just go out there and find you a mortgage for your next rental property. She actually puts you on a plan. So if you want to acquire multiple properties, she can help you plan that out over time. And with your own resources or with joint venture resources, you could follow that plan to get to whatever your end goals are. So if you want to jump on, Danielle. And,
yeah, for sure.
Oh, there we go.
Man. I'm here. All right. So first off, I'll jump back in a little bit later, but right now we're just going to do a really quick market update. Fixed, variable, what are rates going to do? It's the number one question recently. So rates did go up this weekend, Sunday night at midnight at some of the banks. And then of course, following suit, the trust companies went up today at midnight and some last night at midnight. So we are seeing interest rates rise a little bit, but we had fully predicted that. We thought rates would go up a little bit more before they come back down. And when they come back down, we are expecting them to come down by quite a bit. So quite a decent drop. So right now, fixed or variable is really going to depend on a lot of things. We kind of do a bit of a deep dive into what your plans are for the property, what your goals are to kind of see, okay, is fixed better for you or is variable? But for any of you that are in a variable, hang tight because we're going to see these fixed rates come up. We're going to see the prime lending rate probably go up a little bit more, but then we're going to see everything come back down. And then hopefully on that downswing, you'll be able to lock into fixed rates. We did see the US raise their overnight rate as well recently. So it's not really a surprise that we might see a little bit of an increase. But again, like Azad and Tim mentioned earlier with that client that we had an experience with, don't be frightened by the interest rates because the interest rate is only one factor of the equation. The fact that you've got a tenant paying down your mortgage, the fact that you're building up equity, and the fact that you're paying that balance down, all of that compared with maybe a 0.1 or 0.2% difference in interest rate, really that equity buildup, that ownership, that debt pay down, that rental income is all going to be worth it in the long run. And that's part of that cash flow analysis and really coming up with a plan and following through on that plan. So that's my little market update. Not too much going on. We are going to see, like I said, rates adjusting a little bit here, but again, don't let that freak you out. And I'll be back on a little bit later to chat about some other stuff.
Awesome. Thanks, Danielle.